In conclusion of the whole gold thing, I want you guys to know that gold moves from liquidity to liquidity. From inducement to inducement, from liquidity to liquidity, from one internal range liquidity to another. If gold takes out a liquidity, it will surely want to seek another liquidity or create one. All right. If gold takes out liquidity, you surely want to seek another liquidity or create one before it moves. All right. What do I mean? Gold takes out liquidity, seek another liquidity or create one. Takes out liquidity, seek another liquidity. Takes out liquidity, seek another liquidity. Takes out liquidity, seek another liquidity. Takes out liquidity, seek another. So it goes on and on and on, even in an aggressive trend. Even in an aggressive trend, no matter how bullish it still retraces to take out liquidity before continuation. No liquidity, create one. All right. So there's no time that gold will not seek liquidity. That's just the truth. It moves from one liquidity to another. In a bullish trend, your sell side liquidity, I know your mentor have taught you liquidity, of course, your buy side and your sell sides. In a bullish trend, your sell side liquidity, they are more important because your sell side, they are the liquidity that helps you to get entries. What do I mean? Your bullish trend, it is the liquidity that is close to your entries that should be more important to you. Okay? Every sell side liquidity is important in a bullish trend. Every sell side liquidity is important. So this one I just drew now can be like this. Engineer liquidity, inducement, engineer liquidity. These are sell side liquidity in general sense. Okay? These are sell side liquidities in general sense. But of course, the bearish trend, every buy side liquidity is important. All right. Every buy side liquidity is important. Why I'm calling them buy side liquidity and sell side liquidity With I know that there are inducements and there are internal liquidity, there are internal liquidities. I know. I'm calling them in general form. Every sell side liquidity is important in the bullish trend, and every sell side liquidity is important. I mean, every buy side liquidity is important in bearish trend. Okay, taking into that. When the market is bullish, you should expect price to be taking out lows more. If market start taking out highs, no, I don't want to talk about this. It will really confuse you guys. With time, you guys will understand this by yourselves. So I don't want to bring that in here. You guys will be confused and the questions will be all about that. Don't worry. With time, you will understand better. Now, um the question of psychological level. I know that's what you guys are waiting for. Psychological level is not a big deal. All right. It's just areas where the market retraces the most. Like, how did I come up with this? How did I come up with this psychological level thing? You go to way back 2014 price action. 2014 price action. You will understand that there are some particular places that price gets to and reacts and retrace. Okay? There are some particular levels that price gets to. Price will just retrace without anything being printed there. Okay? So, like, this is new all-time high. Gold will have not gotten there before, haven't? Okay, let's say gold have not gotten to this point before. All right. So this is new all-time high. So now my point is that, sorry, please hold on, guys. Sorry, hold on. All right. So yeah, if you look at this zone that price retraced from, this is 2182. All right, this zone 2182, right? Before price started consolidation here, before price finally took it out to 220, 2200. And then price went all the way up again. We traced at, this is 2257, 2260. All right. Now I want you guys to pay attention. Here, 2286. Here, 2300. Now, if you look at these retracements that happened here, this is what. Sorry, let's use EU to write down the numbers. All right, 2180 zone. Here, 2294. Basically, when price got to 2280, it started consolidating. Here, price got to 2360 and started consolidating. Here, price got to 2260. So let's just say 2250 to 60 zone. Okay. 2350 to 60 zone. All right. So now these are my minor psychological levels. The major ones are, look at this zone now. Where did the retracement start from? Look at this place. This is 2400. But the retracement started when price got to, sorry, I think I'm covering something with this mine. The retracement started when price got to 238 zone here. And then before price closed short and came all the way down. So this zone as a whole is a psychological level. This zone, you can see the actual retracement started from this 2390. So the moment price gets to the 80s zones, the moment price gets to the 80s zones, so the next one is like, for example, 2280, 2380, 2480, 2580, 2680 plus. Of course, after these 80s, from these 80s, you should expect retracement. Let's see what happens at 24. Look at this. This next retracement happens from 2250. Did it reach 250? Let's check. The moment it tapped into 250, 250, 2450, price came all the way down, which is in line with this. 2450 to 26, to 60. The retracement started from there. All right. Now, look at this. Look at this. This retraced from 2450. This retracement, where did it start from? 2480, 2480 zone. Look at it, 2480 zone. All right. So that is why I decided that there's something peculiar about this zone. All right. I didn't just guess it. It is just as I'm showing you now. That's how I studied it in the midnight. In the midnight, I always study, looking for new things that gold is doing. That's how I came about this thing that sounds like rubbish. All right. So price started retracing from that zone, got here, consolidation and all. So this one is just normal range. There's nothing psychological about this. This is just normal ranging condition. Market broke out. And when market broke out, what happened next? Where did the retracement start from here? 2580 zone. 2580 zone. So that is why I took that level as my psychological level, that okay, price always retrace from that zone whenever we are in a free zone. Whenever we are in a free zone, price always retrace from that zone. All right. That is how I came about it. It is nothing special. Now look at this. Even as price was going up, where did we get to here? 2680 zone. 2680 zone. All right. 2680 zone. Then this retracement happened. So these zones, I was already like, this is where I was already like used to this kind of zones. That is why I can just easily say it. There was a time I mentioned it on WhatsApp, February 2025. February 2025. I can still remember. Where is that February 2025 self? Okay, yeah. The market is going to get to that zone and retrace. Yeah, February 2025. A market to get to, is it two? Okay, 288. Yeah, I can still remember. Yeah, 2880. A market will be trace. A lot of people be like, Lex, how did you get it? How did you know? How did you know this? I don't really share this information with people. If you see my channel, I can't even share this information with. I did not want to share it with you guys, but I already told Chris that I will do my best. So that's why I'm sharing it with you guys. Can see here 2880 zone. See the retracement. Let's check 2780 zone. Let's see what happened there. You see here? Okay, look at 2780 zone. See 2780 zone. Can see the retracement. 2760 zone, 2750 to 60 zone. See the retracement. So this is my minor psychological level. This is my major. Once price gets to that 80 zone, even though I don't close on my profit, I must close profit. I must close something. Something must. I must close something. I'm not comfortable with um holding trade after that 80 zone. Look at this one now. 290 zone, 29 295, I mean 2950, my minor psychological level, 80 zone, 2985. This is just small retracement. It doesn't really count as anything. I mean 350, 3050 zone. So 50 to 60. All right. Pay attention. Here, 50 to 60 as well. Okay. Here, just retrace from 45. It's like they already know that we are getting used to the We are getting used to the this one was just this is like a blow off top, like a blow off top, like everybody was already looking towards this zone. So there was nothing that is stopping it. A strong psychological zone across all of this. So that's how I've been following it up. 80 zone. You guys can remember this trade for those of you that were in my channel. Price got close to 80 zone and then all the way down. So it became tricky. Like they already know that we are getting used to these figures with them. So it's not surprising. So yeah, that's how I came about my psychological zone, please. It's nothing special. It's just from studies. So yeah, let's have our questions. I really need to rest. I'm feeling so tired. I will record everything together because this is like conclusion and question and answer. So our prefect, I will make you a co-host now.
So
So
good evening,
whenever
sir. Thank you for the opportunity.
so whenever
Okay.
you are whenever you are trading gold and it's a free zone, please. That's when you make use of psychological zone. All right. When gold is in a free zone, like no candlestick have been printed there before. So maybe something like this now, market break here now, for example. So we should be looking at 25680. I mean 5680, 5680, 5780, 5880. Those levels, they are the majors. So that's it. Mr. Marvelous, you can go on.
All right, sir. Thanks for the opportunity, sir. Congratulations for your that, sir. Um, I'll go on with that. You can unmute.
Hi, good evening. Good evening,
Sir, are you
Lex.
recording this one or we are just taking straight that?
Yeah, he's recording everything together. He said so.
Okay, nice. Sorry, I wasn't paying attention. Thank you.
Okay, good evening, Lex. Thank you for the class. So I have a question first, a couple of questions, but let me go with this one first. Please, since this is the last day we'll be having you here, please can you do like a top-down analysis from, let's say today is a Monday, for instance, you go to your charts, what you look out for till like when you are going to take your trades, please.
But today is not Monday now.
Yeah, I know it's not Monday now, but we cannot wait until Monday. So let's just imagine. That's why I said let's imagine today is Monday. So let's just say, okay, it's not Monday. Let's say today is in a day, right? And then
Well,
you want to take your trade, or you are not in an active trade, right? And you want to take a trade for the next day. What exactly do you look out for? Because gold is not like currency pairs where we probably, for person, someone like me, I really get confused when I open the good charts and everything is just like going up, 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 and it's crazy for me.
yeah.
So I would like to see how you do your analysis so that I could have like an idea of what it is. Because from when we were learning from Tech Chris, he used to say that most of his setups doesn't really work for gold. So I would not want to just carry what I learned from him and come and paste here on gold when it will probably not be the same thing. I can't blame him because he has already said it that it might not give me the same thing. So I want to know how it is for you in particular, since that's where you specialize on.
Well, the thing about gold is that you must be ready to. Gold can bring something new tomorrow, and you will feel like it will be like all you know is void. Sorry. So if I want to, let's assume I want to take a trade now, right now. Of
Okay.
course, weekly is bullish. All right. So the small retracement that is going on will not. make me to gold is never bearish. All right. One thing you should know that gold is never bearish. Gold only retraces and consolidates. Gold is a bullish asset forever. You understand? Because it's the number one asset in the world. Okay. So if you are selling, know the levels that you are selling to. If you are buying, of course, know the levels that you are buying to.
Okay.
That's why most people will say that they are not usually comfortable when they are selling goods. So yeah, weekly is bullish. Let's assume I want to trade now, which of course I really want to trade. And I already even told my students that gold is still bullish. Why? Because of what I am seeing. All right. Gold have not given me a reason to be bearish yet. We started from here. Price tapped into this POI just a bit, reading out our loan structures. Reading out our loan structures. So we are still bullish. The high can still be taken. It's still possible. But this is the first level that I'm looking at. All right. But I was even looking at this level before this drop. Okay. So right now, I'm looking at price not closing below this fair value gap. I already mentioned it in my channel. Okay. But they will not really understand why I actually said that. If we go to 4 hours time frame, what we have now is that price, I've taken this as inducement. Okay. Structurally, the following demand have been taken. So the second demand, which is my decision zone, this zone is what will determine if I will maintain my bullish stance or I'll become neutral in my analysis. Whenever I become neutral in my analysis, is that if sell opportunity comes, fine. If it doesn't, if sell opportunity comes, fine. If buy opportunity comes, fine. But when I'm bullish, I'm only looking for bullish opportunity because that is what my plan says. Right now, my plan is saying that I'm still bullish. So I'm only looking for buy opportunities. Okay. So yeah, this is my decision zone. The price comes way below here and close below it, then I can become neutral. But right now I'm still bullish. So which means that I'll be looking for buy opportunities, which I'm still looking for buy opportunities. All right. I'm still looking for buy opportunities.
Okay.
So my 4 hours are already, I've been able to like identify my direction now. I can now use my 1 hour, 30 minutes, 15 minutes to look for entries. It's that simple. Okay. So that's
Okay.
it. Okay. Price just took liquidity. So if market creates opportunity for me, I can buy. All right.
Yeah.
Yeah.
Mm. Okay, that answers my first question. My second question: do you not use the FVG indicator on your? Because I've never seen you use them.
I don't need to use FVG indicator on my chart now. I can easily mark FVG is no big deal now. You can easily mark FVG just by looking at it. There's no need for you to use just by looking at it. You can easily mark FVG.
Okay. Okay. So the last question: you talk about studying, like you study and we get that a lot from TechRace, right? So how is studying like for you? So how do you like study? Do you
Everybody
back
have their
test?
everybody have their special way of studying. My way of studying may be different from your mentor's way. Like
Yeah,
me, I don't back
obviously.
test. I don't back test.
You what?
I don't backtest. I always leave my chart like this. Okay, my chart is always like this, so I can see the information that the markets want to show me. All right, I just want to see like what is the candlestick communicating. This is how I was able to like discover the psychological level that I just taught you guys earlier by just looking at my charts. Like, because when you are trading a free zone, you are trading an all-time high. There's no candlestick printed there. So you need to have something to like, okay, hold on to, like, okay, when price comes to this level, I want to, you understand? So that is how I was able to discover that. Even the 30-minute fair value gap that I shared last year everywhere that people are using to trade, using to make money and all of that. It is still from studying by looking at my chart like this. All right. I'm not saying that people that backtest is wrong. Okay. There are people that do both. But if you are backtesting, you already know what you are looking for on the chart. Okay. You need to know what you are looking for on the chart before you backtest. You are not backtesting to learn new things. All right. But if you are studying like this, like you are on your chart like this, you're able to see the information that you've not seen before. Some people only backtest, some people are doing both. Okay. So that is how
Okay.
then sometimes if I want to do maybe weekly review of my trades that I took for the week, and maybe the one that hits take profit. What did I do that made it to hit take profit? The one that hit stop loss, or the one that I broke even, or the one that I took partial, which I hardly do. Before I take partial, you know that the markets have market is really difficult at that moment. It's so hard for me to take partial because once I take partial, I've already spoiled the plan for that trade. I've spoiled the plan for that trade. There's nothing that anything that will come out from that trade again is not satisfying. All right.
Okay. Mhm.
Do you have any other
All
question?
right. Yes, my last question. Sorry. Okay, so the last question, you said for your entries, you use market execution. That's like you're entering the markets like immediately, right? I understand. I think that's what market execution is, right?
Yes, as market comes to my
Okay.
entry, I take my entry.
Okay. So that is you have to wait to see how the market is going to react at that particular point before entering, or immediately it taps your POI, you're just going to enter. Because
Immediately
I
it
don't know
taps
how
my
to use the market
POI.
execution.
Immediately it taps my POI, but what is more important to me is how price got to my POI.
Yeah.
All right. How did price get
Mhm.
to your POI? Did price create liquidity, or it just use one candle? Because gold is very used to that. It can just use one candle from the beginning of the retracement to the POI that you're waiting for. One candle all the way down. Okay.
Okay.
So was there liquidity before the candle came? You cannot say that what happened here. This is one candle retracement. Look at it. That price reacted from here. The difference between here with this one candle retracement and here, this one candle retracement,
Okay.
what is the difference between here, and here in this one candle retracement? Here, price came all the way to the POI, right? But here, if you look at this place, this is already a loan structure. All right, this is a loan structure. So you should not ever expect much from this because it's a loan structure already. I don't need to start explaining loan structure to you guys.
Yeah,
Now,
no.
this place, how price got here with one candle and how price got here too. Where's that POI? Our price got here too with one candle. Both came with one candle, but one reacted, one did not react. Right? This one did not react. But this one reacted. What is the difference between this one that reacted and that one? Inducements, liquidity. There's liquidity before the POI. That one, there's no liquidity, but both came with one candle. So how price came to my entry is more important to me than price coming to my entry itself. Okay? So yeah, if there's liquidity, price comes to my entry, I will take my entry, whether it is stop loss or not.
Okay. Thank you very much. That's all I have to ask you for now. Thank you very much. Thank you, Marvelous.
Prefect, who is next?
All right, sir. Thank you, sir. Big OGB, you're next, sir. You can speak.
Yeah, good evening, Tech. You can hear me?
I'm not Tech, I'm
Hello?
Lex, please.
Sorry.
They call me
Sorry. No verse. Well, I want to ask, when you when you want to take your trade, first of all, do you mark your after knowing your bias, do you mark your POI from the 4 hours? Okay, let me say you mark your POI from the 4 hours and price get to your POI. Then you confirm the 4 hour the reaction of the price on the POI. Then you move to the 30 minutes and the 15 minutes to look for entry. Is that how you do it?
No. My entry is from 4 hours and my risk can take it. I don't need to go to a lower time frame. It's only if maybe I want to reduce my risk or I want to refine my entry. All right. If my entry is even daily time frame, let's say I get my daily time frame, my fair value gap from daily time frame, and my risk can take it. I don't need to go lower. I will just take it like that. All right. If my
So
entry is in 30 minutes, glory be to God. If it's in 15 minutes, I will take it like that. All right. Except my risk, I don't want my risk to be, I don't want to take that trade with my risk. So I need to find a reason to like refine the entry. That is when I go to a lower time frame. All right. That's when I go to a lower time frame. The time frames are there for you to use. So don't be afraid of navigating through the time frames and that. If the money that you want to risk is not giving you like a desirable result, like okay, you want to do some refinement, you want to say, okay, maybe as this POI is now in 30 minutes, maybe you want to cut it to something like this, you want to find the reason that you go to 5 minutes and then you go now take it to something like this. All right. Because of your risk. But even if my POI is like this and my risk can take it, I will still take it like that. So honest, I've taken a 1,200 pips SL trade before. All right. 1,200 pips. I've taken the trade before. So it's not by whether I'm going to a lower time frame or not. If my risk can take it, I have no issue with it.
So in other words, once your price get to your POI and give you the confirmation, which is the inducements and the fair value gap and the liquidity sweep, you take the trade directly.
Yes, sir.
Okay. I want to ask, what's your minimum arrow?
4 hours my minimum. I've never traded
4.
anything below 4.
Okay, 4 hours is your minimum.
Yes.
And you said gold is mostly bullish. It's not bearish. So
Gold
does that
is
mean you only buy?
99% of my trades are buy. If you go to my X account, you barely see sell.
I follow you on X.
Okay. So 99% of my trades are usually buys. If market is selling like this, I take few trades. In fact, most times I don't even trade. You can see now that the sell that happened today, it's not like I did not see it. I saw it, but I did not take it. I was waiting for my buy. You understand? So that is how it is, because my general bias is still bullish. So I don't want to confuse myself with the opportunity will never finish. All right. So I'm always buying. I'm always buying. I'm always buying. Sometimes when I see sell opportunities and I still take, fine, but I'm always buying.
Okay, my last question. You marked the last PY you marked that I think the 4 hours PY you marked. You said you mark a bigger zone. I think I am seeing a loan structure there. Before I'm not seeing a PY. I'm not seeing a PY structural order block or order block below. Can you go to the 4 hours? Let me see. Let me show you. Yeah, this place you mark your point of interest. I think the upper part is the loan structure, right? Oh, yes, the
This
loan
one is not a
structure.
loan structure, please. This
So,
is
sorry,
not a
sorry,
loan
sorry,
structure.
structural
This,
order
this,
block.
this one, structure order block, yes. Why this one is the
Okay.
loan structure? This one, so
Okay.
this one is
Okay.
order block. This one right here is structure order block. This,
Yeah, the upper one is structure order block. Why the other one is low structure?
yeah. So if price fails from here, except maybe there's an interaction. Let's go to like 1 hour and see. Because some of these brokers, they present these POIs in different ways. That's why if you see my trading view watch list, I have up to four brokers of gold. Because I have to like check POIs sometimes whether they are even the same. If price fails from this structure order block, price will come lower. To use this as
So the low structure.
yeah. So that's it. Except another broker is presenting something else. Gold is just, I don't know. It's only gold that have all these kind of discrepancies, and then indices too sometimes. So
Okay.
that's why I
So
identify this whole zone as my decision zone.
yeah, you marked everything.
Yeah.
So any reaction from there you can enter.
Yes, exactly.
Okay. If you are to say, since you say you have like four, okay. Yeah, you still talking?
Yeah, go on, go on.
Since you say you have like four brokers, among these four, which will you say should I say is more higher than the probability is higher than among the others? Which one are you more satisfied with?
I don't even know, honestly. Oanda is good. Oanda is good. Oanda, Saxo, Forest.com, and FXCM. Those are the major brokers that I Oanda, FXCM, Forest.com, and Saxo.
So you don't use capital.com.
No, I don't use capital.com. I've never done analysis on this. I just use it for teaching purpose, like.
Okay, because no gold is good. You
Yeah,
can't play with it. If you play with it, you get burned.
gold is good. I like how you said it, that gold is good. uh So yeah, you have to make sure that
You know what you are doing before you trade gold.
huh?
I say you have to know what you are doing before you trade gold.
Yeah, exactly. Except you have some money that you are willing to sacrifice. You understand? So every trade must count. Every trade must count. Every trade must count, whether it's a loss or not. Must count. If it's a loss, it must count that okay, you learn something from this loss. All right. It's only good that if people are saying there's nothing to learn from a losing trade, don't listen to them. Oh. As a good trader, there's always something to learn from a losing trade. There is always something to learn from a losing trade. And even your winning trade. All right. What did I do that made me to win this trade?
So you journal it down so you can remember.
Yes, every trade I've taken since 2024 on gold, I have it in my head. I know the trades that hit stop loss. I know the trade that hit TP. I know the trade that I exited before they moved. All right. I know the reasons why they hit whatever they hit. Okay. I don't even need to even go to my journal or go to my Telegram. Say, okay, no. Everything is in my head because there is always every single trade counts. Okay. Every single trade
Okay.
counts.
Okay,
So
my last question.
if you use the same approach that every trade must count, I tell you, you will even be taking fewer trades. You will find yourself taking fewer trades.
Okay, my last question. Does gold CROT work on gold?
I don't know. I don't trade CROT, but yes, as long as it prints candlestick. What's CROT? It's not candle range theory, right?
Yeah, yeah.
Let me tell you that candle range theory is basically just candle range liquidity. All right, it's candle range liquidity that they just renamed to be. It's not price taking out a high of a candle and then coming to
I'm
take
going
out
for the low.
gold
Yeah.
that gold
I can
that
see 1 year now. I
gold
can see
that
1 year. Move your cursor there.
where
Yeah, this one, this long candle, this long one. You can look at this one now at the middle where you mark before the second mark. The second, yes, that place. It gave us a tweezer bottom and
okay.
with an opposing candle.
So as long as it prints candles, it just renamed it and called it candle range. It's candle range liquidity. Their price takes out the high, like this daily time frame now. All right. Their price takes out the high and they come for the low. Take out the low, come for the high. That's simple. I've used this several times. The thing is that I always like to use it I always like to use it in higher time frame, like this daily candle now, price taking out. The thing is that because I'm using it in higher time frame, I always like price to be claim that range first. Price will come back and be claim it before I position. Okay. I always like price when I'm buying, I always like price taking my low first. The low of the candles that are being printed first. Okay. It gives me hope that okay, yeah, price will come. There's something that price is coming up to come out clear. I always like price taking out my lows before coming for highs. I always like price taking out my lows before coming for highs when I'm buying. Once price starts taking out only highs, something is wrong. All right, something is wrong. A retracement is going to happen for price to come for low. Once price start taking out um only highs without coming for lows, that's one of the things that price did here that made me to sorry. Can you guys see my screen?
Yeah, we are seeing it. Can I see your screen?
That's one of the things that gold did here that made me to. I just I told them on my channel that the reason why price did not come for this level that before doing all of this, you can see how price just kept taking out highs without taking out any low. So this is already a problem in a bullish trend. If gold is doing something like this, all right, just expect a retracement because this cannot be happening. So price took out highs for lows. Once it start taking lows like this now, when the buy happened from here and the market started taking out lows, yeah, I was confident that the news was going to be bullish. Was going to be bullish for gold. I was confident that the news was going to be bullish for gold because market was just taking out lows and lows, you know. So that is one thing that you guys should take note of for you guys that are CROT traders. It can give you a clue. Any other concern?
Thank you. And the last one, I don't know. This one is kind of not kind of related, but kind of related. Based on this prop firm, I think I find out that you hold trade a lot for a longer period. Like the last one you
Yeah,
did,
because
19 days,
I trade with balance.
FTMO.
I trade a balance-based account. Okay, not just FTMO. You must trade with a balance-based account for you to enjoy swing. Please take note.
Balance-based account.
Yes, a balance-based account will not calculate equity, your running profits as part of your drawdown. For example, now, you, if you if you have a 100K account and you take a trade today, you're in $1,000 profit. All right. Normally,
Yes.
your daily drawdown is 5%. All right, which means that if price for today, your daily drawdown is 5%, which means that if price comes to 95K, you will lose the account, right?
Mm.
Now,
Yeah.
for balance-based accounts, if you go into the next day, because if you roll over to the next day with $1,000 profit on as a running trade, running $1,000 profit that you have not closed,
Yeah.
if you roll over to the next day, they will not calculate that $1,000 profit as part of your drawdown. So even if market comes back to your entry, your drawdown remains 95K threshold. Okay, it still remains 95,
Okay.
even though you are in $10,000 profit and you have not closed it. Price can come all the way to your entry, losing that $10,000 profit, running trade, and it will not be breached until the balance you used to enter that day, not the equity. You know that the equity is your balance plus running trade, right?
Yes, but yes.
Yes. So it is the balance that they are focused on until price comes all the way to your entry, and then you start losing from your balance. Your drawdown will not count.
Okay.
All right. So if you enter a new day with $10,000 rolling profits,
Mm.
running profit, and you close that $10,000 the next day, that day, your daily drawdown will now be $5,000 plus your $10,000 profit. That makes it $15,000. So you need to lose $15,000 that day for you to breach daily drawdown. That is balance based.
This
But
balance base you're talking about, sorry, continue.
go on. You said go on.
This balance base you are talking about, the pro firm they give, or they have the account on their platform, or you request for it, or how do you
Of
go
course,
about
they
it?
have their account on their platform. FundedNext offers balance based. FTMO offers balance based. Those are the two firms that I know of that offer balance, like real balance based, daily and maximum. Because some firms offer, they will tell you that the daily journal is balance based, whereas it's not balance based, it's equity based. Equity based is that if you if you roll over to if you roll over to the next day with $10,000 profits, that's a running profit of $10,000 enters the next day. That day that profit enters, it is from that your running $10,000 profit that they will take $5,000 drawdown from you. So if your profit goes back to $5,000, you will lose that account, even though you did not lose your entire running profit. Okay, that's
Okay.
it. So
Okay.
you can't swing with that because swing retracement may come and all of that. You will just say that your account is in profit, but you hit daily drawdown. What is going on?
Ye- Yeah, it happened to me last night, FTMO. They just sweep the account.
Is it
Silo.
one is it one step?
Swinger, not one step. Swing account, 2 step.
Swing account? No, they can't do that in swing
Yes.
account.
If they did
Swing
that, I had to reach out to them. Oh. But their explanation, I know it doesn't make sense to me. Say slippage.
okay,
Slippage,
it's
everybody they
oh,
call it.
page. Oh. Slippage is different. It's a different case entirely. In fact, slippage, in fact, you don't even wish that slippage happened to your. I'm not gonna lie.
So is there any way one can avoid that slippage of a team? Because I'm writing it is right now. I don't think I'll buy their account again. They are being stupid.
Slippage happened to me. My first 100K funded account that I had with FTMO, it happened to me too. Do you know what happened? You know what? You know what? Anytime that um your price is at your entry, okay, anytime market want to close and price at just close the trade. Alright.
Yeah,
That's
before the market want to close, I'm priced at my entry. Just close the trade. It's better.
just close it. It's better like that because FTMO opens 5 minutes after market opens. That 5 minutes, what gold can print in that 5 minutes, if it really wants to do, like if it really wants to be wicked, gold can print up to 500 pips that within that 5 minutes before FTMO even opens. All right. And by the time it opens, it's too late. Just like here now, for you can see this gap that happened.
Yeah, the big gap.
Maybe FTMO can come and open right here instead of here. So somebody that is selling will come and meet stop loss here instead of here.
Yeah,
So
that's true. Thank you. And the final question before you go, please. How do you manage your risk after a
it's
winning
simple.
trade? How do you manage your risk?
My risk is simple. In my challenge account, I risk 1 to 1.5%. In my funded account, I can use 0.5% to enter profit first. Then I can now be risking 1%. All right.
Does that mean you counter trade?
No, I don't counter trade. I don't
Okay.
I don't hedge, if that's what you mean.
Yeah.
I don't hedge, no.
You don't open multiple position.
Of course, I can open multiple positions, but in fact, that's even one of the reasons why all these firms do not even allow me to rest now. Like sometimes I can open another position as a continuation. Maybe the next day I'm swinging, and then I open another position as a continuation. Maybe continuation entry opportunity comes, and then I enter. But for firm, I don't usually open more than 3 positions. It's usually one or two. So just know that when you start getting paid, once you start getting paid consistently, Profem will definitely send you email, no matter what you do, even though you are risking
Why are
$1.
they sending him? Why are they sending him to stop you from making money or what?
Because they will always look for excuses to reduce the amount that you are cashing out and all of that. Reduce
They
the
are not
rate.
reliable.
See, you can be losing, you can be doing the same thing and be losing all your accounts, and they will not send you one email. But
They are evil.
once you start getting paid, of course, they have to protect their business. You know, once you start getting paid, you've entered their watch list. They will start watching you, like looking for loopholes and all of that. So you just expect it. Don't. That's why I say that core firms are for you to scale your personal account.
It's all good. So you are a swing trader or a day trader?
I'm a swing trader, and sometimes I day trade too. I day trade when I
Thank
have continuation entry on my swing plan.
Thank you very, 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 very much. Thank you very, very much. Thank you for choosing to come put us through the good lesson and make us understand more about good. Thank you so much. Thank you, you and Tech Chris. I owe you guys. You guys are good
You're
compared to
welcome.
those useless idalos. Thank you, gracias. I'm
Yeah, waiting
serious. I have one at mind. We'll go fight last one. But
for
no, wala. For real.
Voila.
Thank you, gracias.
Mention his name now, I beg.
Akindamola.
I
I'm
beg.
sorry.
Now you're the bad boy. Me ain't go fight. No, wala. Thank you, gracias.
All right. Kingsley, Egbo Economics.
Good evening, Sir Les.
Good evening, sir.
Thank you very much for the knowledge. I have few questions.
Go on.
And number one is, how do you take your confirmation entry when the price at your POI?
Have you not been in this class? Mr. Have you not been in this class?
Been. I'm finding it a little difficult.
Most of my trades, most times I don't take confirmation entry, please. I take aggressive entries. Price comes to my entry, I take it like that. Okay. But if I want to take confirmation, maybe I want price to react first. I make use of fair value gap. All right. In my lower time frame, I can use my fair value gap. Because I told you guys that once price comes to my entry, I want to always see fair value gap being printed. Okay. I want to see fair value gap being printed. It shows me that okay, that entry is authentic. It's the people that the side that I'm on is aggressive. Okay. So price forms a fair value gap, and then I use my fair value gap for continuation entry. All right. Or if candlestick pattern like reversal candlestick, like the hammer or the bullish engulfing and all of that, they are formed
Right.
at the entry zone. I can then take my entry.
All right, sir. My second question is, so you once posted on your X how you trade 30 minutes entry on gold. Can you please throw more light on it so that we'll be able to
30 minutes
know
entry.
as we're
I
having
didn't say anything like that.
so how to trade 30 minutes using 30 minutes to trade gold.
I didn't
You
say
once
anything like that. Do you mean
posted
30
it on
minute fair
your
value
X,
gap?
but you deleted it.
Do you mean 30 minute fair value gap?
I didn't hear you. Yes, we had to use it on gold, sir.
There's nothing special
You once
about that.
posted it on
It's
your
just
so you
once,
once posted it on your X, but you deleted it. I don't know why.
yes, I deleted them because the informations, people are now using it like it's too much. And then something happened that made me to delete those posts. Some people are really, really ungrateful. So yeah. And then I was not even supposed to post about it at the first place because when you share something valuable for free, people don't value it. The 30-minute fair value gap is just like market when gold wants to once gold establishes a trend, it usually use 30-minute fair value gap for continuation. Like this sell that happened here now. You can if you pay attention, you will see that it is 30-minute fair value gap that gold used for retracements the most. But take note that inducement liquidity generally must be involved. All right. It's it may not always be obvious in this 30-minute time frame. I mean the liquidity, but it can be obvious maybe in 15 minutes or in 5 minutes. Okay. So when gold taps into your entry, just expect fair value gaps to be created. And once you want to take continuations, I always like to consider 30 minutes or 1 hour fair value gap. 30 minutes or 1 hour fair value gap. All right. If the fair value gap is not clear in 30 minutes, go to 1 hour. They both work together. 30 minutes or 1 hour fair value gap, like this one now, just like this one now. Market taps into my entry. All right. The first thing I should expect is price creating fair value gap. Luckily, it's only one fair value gap that is here. which is in 30 minutes. Continuation. All right. So this continuation led to all of this. So that's how I trade it. Any other concern?
Thank you very much, sir. Well, I appreciate it. God bless you, sir. That's all for now, sir. Thank you, sir.
All right.
All right, sir.
Any other person?
Yes, we have a couple, sir. Aminat Ozio. Sorry if I do not get your name pronounced well. You can speak. Aminat.
Good evening, Lex. Thank you so much for your time. I would like to ask about we were taught time and price, like session trading during turkeys, especially on lower tension. So I would like to ask compared to the 30-minute time frame, because when the other guy asked
I'm sorry, please.
Joe, you say
I'm
you
sorry. Please come again. I'm not even hearing you clearly. Please, can you speak slowly and more audibly, please? Thank you.
okay, all right. I want to ask question concerning time and price. Like for your day trading, is there a particular time session you trade? And are there high probability days for the week you look for the setup to happen?
Well, I don't know if time and price. I don't know about other players, but good can react at any time and at any day. All right. Good can do anything at any time, at any day. It can make the whole move of the week in one day. And the remaining days, it will just be in one position there. God can do anything at any time. All right. Whether it's New York or is 4 p.m. or is 3 a.m. or is 6 a.m. Gold can do anything at any time. Okay? Because gold is a commodity and it is influenced by the happenings around the world. So whenever that thing happens, wherever gold is on the chart, anything can happen there. All right. It's not like some pairs that it's only New York that they used to move. No, gold can move in Asia and use New York to range. Gold can move in London and use Asia to range. So anything goes for gold. That's gold is gold. It doesn't respect anything. It just moves. Okay?
All right, thank you so much.
Any other concern? Marvelous.
I don't think so, sir. Right, Semele. You can speak.
Thank you. Good evening, Lex. Good evening,
That
ma'am.
name sounds familiar. Go on.
Yeah, good evening. Thank you very much for coming to teach us on psychedelia. I've got a few questions. So the first one is here. When the inducement trade into the fair value gap, does it invalidate the fair value gap? If you take in the yes. When price trade into your fair value gap, does that invalidate the fair value gap?
No.
Okay. And then the second one,
if price comes into my fair value gap,
yeah.
depends on the mitigation. You just tap on it small. You still have the ability to react again if price comes to it. But if price rates everything completely or rates more than 50%, then fair value gap is done for.
Okay.
On.
Okay, so another second one is when you have a fair value gap formed before whether a buy or sell reversal. So when you have a fair value gap formed before your order block, that's after an inducement, where do you pick your entry from? Do you then use the order block or do you use the fair value gap?
I use the fair value gap if the market is in an aggressive condition. That is, if the market is trendy, okay? I
Yeah.
use the other block if the market is in a ranging condition.
Okay. Can you go to the 4 hours again about that structural order block and the loan structure? Because I was looking at that set and that I was looking at the chart and I was looking at those two zones.
Okay, sir.
Yeah, yeah, yeah. So you see that zone, the one you call the loan structure, is that not zone not reacting to that place, to the bottom where the fair value gap is?
You said it's not reacting to
You
what?
can go to 2 hours. Maybe perhaps it will show better. Go to 2 hours.
I think the problem is this
Yes. So you can see the wick from that loan structure. Is that not reacting to that bottom structure, or or would you still consider that a loan structure? Because I was quite confused when I saw like the wick is already overlapping with the other wick from
okay,
the
okay, I
left.
get you now.
And
I get you now. Yeah.
uh-huh.
Yeah, I get you. Yes, it's still a low structure because it did not properly mitigate into the structure below. Okay. If price taps into
Okay.
this, if price taps on it like just touch the wick like this, price can still
Yeah.
come and take it out as a loan structure because it did not properly tap into this structure
It
below.
didn't tap to the body.
Yes,
Okay.
please
And
take
then
note of that.
Okay, because I was looking at that and I wasn't sure if okay. And another thing, you see that structural order block on top of that loan structure. What makes that a structural order block? Because all I see there is mitigation, and then price still came to buy from there, although it didn't buy all the way up. But why did price come to react again from that zone
You know why this is a structure
when
of that
there's a
block?
lot of
Because
mitigation?
there's series of POIs. There's series of POIs that led to this place. Okay? Series
Okay.
of POIs, series of POIs, series of mitigations happened there. All right?
Yeah.
Series of mitigations happened there.
You see this mitigation. I thought this mitigation has taken out liquidity there, and the price coming down again would have invalidated this zone and go further
That,
down, but price still bought from this zone.
yes, because there's another block there now. There's a single candle other block there. See it now. This POI here. Look at it. This POI.
Yeah, yeah. No,
It's not.
this one is go. If you go to the right, that single candle that came, go to the shrink, zoom out a little bit now, and then
Go to
to
where the right. Where's the right?
no,
This
no.
side.
So
Okay, this
yeah,
side.
yeah, yeah. Correct. Yeah, this candle that still came to buy from that zone. This long candle that came around 1800.
Mm-hmm.
Yeah. So
Market is in a ranging condition.
uh,
And this
okay.
and this mitigation that happened here,
Yeah.
I already explained this now. The market did not take up to 50% of this POI. That is why it's still reacting. Okay.
Okay.
Don't forget that this mitigation is what led to this reaction here. Okay.
Okay.
It's just that market did not react up to 50%. If this mitigation that happened here, this small one, should have
Yeah.
taken up to like 50%, and then this one up to like 75% of the POI. This one would have not survived.
Okay.
Why did this reaction happen? This reaction, why did it happen after price take out this low? Because this POI is barely even mitigated.
Okay.
So yeah, as long as price did not take up to 50% of your POI, it can still
Yeah.
react again. All right, can still
Yeah.
react.
And you can say the same for fair value gap also. If price doesn't mitigate 50% of the fair value gap, then that fair value gap could still be mitigated again for
It can still be
a second
mitigated
time.
again, but
Okay.
it can still be mitigated again, but only in aggressive conditions. So, like in
Okay.
a trendy condition. If it's a rangy condition, market is likely going to take it out. Please take note of
Okay. Okay. All right.
any
Thank you
other
very
question.
much.
Okay.
No, that's it.
Oh yeah, marvelous. Who is next?
Okay, sir. Thank you. Let's call MPO. You can speak MPO.
Hi, Lex.
Good evening.
Good evening.
Please, can you be more audible? Thank you.
I try. Do you use silver as a divergence indicator when trading gold?
No,
Okay. And
I hate silver. I don't know. I don't know. I've tried to trade that pair. I don't know. It keeps acting like I feel like because I've studied gold to an extent, it should be easy for me to trade silver, but it's giving me the vibe of I need to start silver the same way I started gold. And that's not a good thing because I can't leave gold and go and be starting silver the way I started gold. No. So I don't.
okay. And do you analyze gold futures charts?
No, I don't.
All right, thanks.
But if you do, it doesn't mean that you should stop because sometimes um they still tell me like I should check. There's some information that I would like to check on the futures charts. Okay. Maybe like okay, price went all the way above where the sports chart, where the sports price is and all of that. Like if you want to really see the true price of the pair, you should go to the futures charts according to what I know. If you want to really see the true price, and that is what they say. But at the end of the day, we are all trading the sports charts. So if you are using any information on the futures charts, doesn't mean that you should stop as long as you know what you're doing. All right. Any other concern?
Yes, sir. Well, let me go. And during Daniel, okay, just the left. And during Daniel, you can speak. And during.
Good evening. Good evening.
Good evening.
Good evening, sir. I want to ask him about the mitigation block because I've watched like the recorded video, but I'm not like understanding the mitigation block. If you can just like explain it to me.
Sorry, I didn't even hear anything you said.
Like mitigation block. Hello?
Hello.
Hello?
Hello.
I
What is your question, please?
like mitigation block. Like I want to understand it. Because inside the video, the class with the last 2 weeks. Last
Omo, I
two
can't, your background is so noisy. I can't even hear what you're saying.
okay. Let me look from how about now, sir?
I can hear
Hello?
you.
Like I said about mitigation block. Like I watched this in the video where you told us about mitigation block, but I don't see like understanding. Maybe like can just explain more for me. Like I'm still confused that about that mitigation block.
For example, we have a bullish trend, all right?
Okay.
All right. And then just basically price using a, fa- a failed supply zone as demand, all right?
Okay, it can be a single kind of that block. It can be
It can be
this
anything
now.
as long as it's a
Okay,
supply zone
okay,
or the price
okay,
taken out a failed demand
yes,
zone.
okay, sir.
But it has to be that the trend is already established. Like the trend, you already know the trend. Okay?
Okay, sir.
Last person, please.
All right, sir.
Last person, Abby.
I'll call him, yes. Could be MIC Michael or Michael. Michael, just submit yourself.
Okay, thank you very much, Lex. Thank you for an amazing class. I would like to ask, you spoke about something close to CRT where candle liquidity is taken, and you said that you would expect that to happen, else there might be a deeper retracement. Can you please walk us through like the last or the most recent two cases where the candle was swept on the daily or the higher time frame, and then like what did you do, like the steps you took to actually take a trade after that happening? Can you please like walk us through how you took a trade after that situation happened, like the most recent two examples, please?
Okay, yeah. One of them is here. This. All right. This candle. One of them is this candle. Okay, like I mentioned, please let me clear out something so that I will not be confused. Okay, price took out this low. So I went to my, is it 1 hour? No, 30 minutes. So if you will see I don't know if I shared the trade on Twitter. I think I did. Can't really remember. So price reclaimed. Oh, sorry. Price came ranged and ranged. My first entry here. I think I still have the screenshot of the trade. I can share my screenshot with you so that you see it. And then the second entry was from 1 hour fair value gap. That's the second fair value gap here. All right. So market took the low first before I took my entries. All right. Did I even take any other entry here? I think I took this entry. Yes, I took this entry, but it was in a different account. Okay. The market eventually took out this high. I was even still holding my trade after market took out the high. So basically, market took out the low of the daily candle, and my second car came from this trade. This trade. The first entry I took was this, which I had for like, is it 3 weeks now? Or 2 weeks? Is it 2 weeks? I mean 3 weeks, sir. So these were like re-entries. Okay, these were like re-entries where everybody was bearish, and then I was seeing re-entry opportunity. Then I took it. Okay. Now this buy that happened, although I missed it, I was anticipating it because sorry, price took out this low first. I was really hoping that price takes out this low of this candle first before coming for the high. All right. Although I missed the buy, but I was supposed to take this buy for price to take out this high. In fact, where I was even looking at in 1 hour was the fair value gap as my target here. My target was here, inside here. All right. That was where my target is. So I was supposed to take this entry towards that target, but I missed the trade. I was so busy. I missed the trade. So yeah. Those are the two cases that I've actually applied that principle on the daily time frame. I always like to use daily time frame to run it. I said only use 4 hours, but daily it gives me clue. Did that answer your question?
Yes, sir. Just one more. And that would be Kubi Deye. Last person, sir. Kubi, you can speak.
Yeah, good evening.
Good
Yeah,
evening,
good
sir.
evening, Mr. Lex. Hello.
Good evening, sir. I can hear you.
Okay. Thank you for your lessons and your time. My question is regarding time frame. Honestly, going through your previous classes, I notice you don't go down to the 5 minutes time
It's
frame.
it's a good observation. I
Uh,
don't trade below 15 minutes. That's it.
yes. So you made mention of that
Okay, I mentioned
earlier.
it. Okay.
Yes. Anyways, talking about market structure, when I go to the 5 minutes, I kind of see the market structure clearly than in the 15 minutes and the higher time frames like 30, 1 hour.
Are you a
And
scalper?
I'm not actively trading like in my learning phase. So
Okay.
I just kind of, let me say, I resonate better when I look at the 5 minutes time frame. I kind of understand what the market is doing clearly on the 5 minute than on the let's say 1 hour, 30 minutes, 1 hour, and all of that. So although I use my 4 hours for the higher time frame, like applying the CRT, like trying to know the market direction with the 4 hours. Then talking about executing the trades, I find it very easy to frame a setup on the 5 minutes. So I don't know
That's a
if
good thing. That's a good thing as long as you're a day trader or you are a scalper. Okay? It's a good thing. So you can work with that since that is where you're getting clarity from. All right? Work with that. Okay?
okay,
Because the same candlestick that is printed in weekly is printed in 5 minutes, printed in 1 second. Okay? It's a
yes,
good thing that you even found your time frame early. It doesn't mean that you must do what your mentor is doing. You must use the same time frame that your mentor. See, my first mentor in 2020 was she was a day trader. All right. She always tell me that she close my trade every day, whether it's a loss or profit. But that's not the kind of trader I wanted to be. Like I want to see the end of the trade. You understand? So I was more like a swing trader. So it doesn't mean that you must discover yourself, which you've already discovered yourself. So I'm happy for you. At least you'll be able to find that time frame that gives you clarity. A lot of people will use years to find it. So
okay. Thank you very
work with
much.
that time frame that gives you clarity. Nobody will
Okay,
care whether it's 5 minutes or if you are making money that is money that you're making. No. That's if they will even want to come and learn that 5 minutes. You will see swing traders in your class that want to learn from your 5 minutes. That's it. So it's a good thing.
okay. Thank you very much for the clarity.
Okay. That's all for thank you
Yes, sir,
guys.
that's also.
This is where I draw my